Well, our next guest, Brian Jackson, who's a senior strategist for emerging markets at the Royal Bank of Canada, says that China will increase its lending rate at the end of this quarter. Now, Brian previously worked as an economist at the Bank of England and also at the New York Fed. A good Thursday morning to you, Brian. Let's talk about these CPI figures that we're expecting later on today. Now, we had those somewhat, say, disappointing export figures yesterday. Do you really think CPI is going to hit around 2% for January?
It'll be around there, I think. And, more importantly, though, the trend is clearly positive. Just a couple of months ago, it was still negative. It's heading in, an upward direction. And if you look at some of the, the money supply numbers that are associated with the high bank lending that we had last year, the trend, I think, is going to be for higher inflation in the months ahead.
And what about the export numbers? I want to bring that back in because the markets were disappointed seeing that exports that came in lower than what was expected by economists. They're saying, well, if the export machine is not running in China, can we believe in this recovery?
Well, again, I think the positive trend, though, in exports is still there. You do tend to have exports drop off in January relative to December. And, we've got the Chinese New Year and the low base from last year, I think, having an impact on the numbers. But overall, if you look over sort of a multi-month period, the trend is pretty clear. Export growth is strengthening. And again, I think we're going to see that continue in the months ahead. And
inflation, do you think the Chinese authorities can keep this in check? Because we had those loans numbers in January, pretty staggering. They're actually more than the 3 months previously combined. So, what about this threat of inflation in China right now? Is it a bigger fear than expected?
Well, we're going to get the bank lending numbers sometime this week as well. And you're right, they're going to show pretty strong growth in January. But that's typical of most years. You tend to get a lot of bank lending early in the year and early in the quarter. I think going forward, you're going to see bank lending come off a bit because Beijing has started to tighten things up a little bit in bank credit. They've increased reserve requirement ratios for the banks, and they've also tried to tighten some of the restrictions on lending as well. So going forward, I think you're going to see bank lending come off, and that's part of a broader move, I think, towards tighter policy in the months ahead.
Speaking of tighter policy, we were talking earlier, Paul Gordon was talking about how the Chinese authorities are trying to raise wage hikes, some wage hikes in order to restrain the economy.
They've been increasing minimum wages in various provinces, another one's coming through in Shanghai. And it's seen by some analysts as a way of taking the pressure off the yuan, so you don't have to have a big one-off revaluation. You can have small steps and yet let your own citizens benefit from the growth China's having. Is that likely, you think?
Well, as you say, we've already started to see it, and I think that is one way you can relieve some of the pressure on the currency. But it's also a potential concern for inflation pressures going forward as well. So I think if you really want to try to get the economy back on the right path, you do need to use all policy levers at your disposal, and that's going to include higher policy rates and, I think, a stronger currency eventually as well.
So would you see the stronger currency being stepwise, though, or would there be one day they come out and say, right, 5% from tomorrow?
That's a risk, but I think the potential impact on the export sector will make sure that they don't go down that path. We expect it's going to be a more gradual process. It's going to start, we think, around the end of this quarter and then proceed gradually over the rest of the year to around 650 at the end of the year.
All right, let's talk about those interest rate hikes. You're expecting one at the end of this quarter. Is that going to be a gradual process month on month from here on?
Well, yeah, more quarter on quarter. We expect roughly one interest rate hike per quarter over the rest of the year. Again, you've got current policy settings that are in place. They've been in place for 12 months now. They were put in place at the height of the global downturn when everyone was very worried about the Chinese economy. Now we're in a different place, and I think it's appropriate that policy adjust accordingly.
Okay, Brian, thanks for dropping by today. Thank you for that. That's Brian Jackson of the Royal Bank of Canada. He's a senior strategist for emerging markets.